What if I told you the world's richest country was brought to its knees, not by war or natural disaster, but by economic policies and market speculation? Picture this: the Roaring Twenties, a time of unprecedented economic growth in the United States, a decade flush with post-World War I optimism. Money flowed like water, credit was easy to come by, and the stock market was the place to be. But beneath this veneer of prosperity, cracks began to form. Overconfidence surged, and speculation became the order of the day. Everyone, from the Wall Street tycoon to the average Joe, was swept up in the frenzy, betting their fortunes on a market that seemed to have no ceiling. Unbeknownst to many, this feverish speculation was inflating an economic bubble, teetering on the brink of collapse. And so the stage was set for the greatest economic disaster in modern history. October 24th, 1929, a date etched in history as Black Thursday, marked the beginning of a financial meltdown. In the heart of Wall Street, a storm was brewing. The stock market, once a symbol of prosperity and wealth, began to falter. Investors driven by fear started to sell, triggering a domino effect. As one stock fell, so did another, and another, creating a catastrophic downward spiral. The market was in free fall, and panic selling only fueled the fire. The once bustling trading floors were now scenes of chaos and despair. Banks, the supposed guardians of our economy, were caught off guard. They scrambled to stem the crisis, but their efforts were in vain. Their failure to act decisively exacerbated the situation. It was a race against time they were destined to lose. In the blink of an eye, fortunes were wiped out, and the world was plunged into an economic abyss. The dominoes had fallen, and the Great Depression was upon us. From Wall Street to Main Street, the Great Depression spared no one. It was a time when the world was plunged into a chasm, a profound abyss of despair. The ripple effects of the economic downturn were felt far and wide, leaving a trail of massive unemployment. Millions found themselves out of work, their livelihoods snatched away by an invisible hand of economic misfortune. The widespread poverty was palpable, as families struggled to put food on the table. The once bustling city streets fell silent, the echoes of prosperity fading into the distance. The world economy contracted at an unprecedented rate, and nations found themselves in the throes of an economic crisis that seemed insurmountable. Traditional economic policies, once thought to be the bedrock of financial stability, failed spectacularly. They proved ineffective in the face of such a crisis, leaving the world grappling for solutions in the wake of their failure. The world had never seen such economic devastation, and it was a harsh lesson in the dangers of unchecked speculation and economic mismanagement. The Great Depression was a dark period in financial history, but it also offers us invaluable lessons for the future. As we delve into the lessons from this era, one of the most significant takeaways is the importance of sound economic policies. The Depression was fueled by poor decision-making and a lack of effective policies to stabilize the economy. Fast forward to today, and we see the importance of such policies in maintaining economic balance. Central banks around the world now have tools to manage economic downturns, thanks to the lessons from the Great Depression. Another key lesson comes from understanding the dangers of uncontrolled speculation. Before the crash of 1929, there was a speculative frenzy, with investors borrowing heavily to purchase more stocks, creating an unsustainable bubble. Today, as investors, we must be wary of such bubbles. It's essential to maintain a balanced portfolio and avoid putting all our eggs in one basket, no matter how tempting the potential gains may seem. This brings us to the third lesson: the role of regulatory oversight. The chaos of the Great Depression led to the creation of regulatory bodies like the Securities and Exchange Commission in the United States. These organizations were established to protect investors, maintain fair markets, and ensure financial stability. As modern investors, we should appreciate the value of these regulatory bodies, understanding that they exist to prevent a repeat of the disastrous market crash of 1929. Lastly, it's crucial to remember that investing is not just about chasing profits. It's about economic growth, job creation, and building a sustainable future. The Great Depression taught us that when we focus solely on profit at the expense of everything else, we risk causing enormous harm. The Great Depression was a stark reminder of the havoc that can be unleashed when greed and speculation run amok. As we navigate the financial landscape of the 21st century, it's crucial to remember the lessons of the past to safeguard our future.